Alrighty. Well, I think it is good to just kick this party off here. Still a little under the weather, so I got to miss all of Friday's festivities. But when I look back, I was not that upset really about missing too much. It was Thursday's close that seemed to have most of the action. But I'll just do this usual song and dance. We'll talk, what's coming up next week, some of the headlines and stuff, anything we've seen over the weekend, general trends and uh, stocks and so on. So, market obviously, finally gave a little bit of weakness yesterday. It was for, out of all of this time, the only amount of weakness we really got was right here. This is it. Just you get about 30 minutes of selling, and that's all we've gotten really so far. Oh God, thank you for that. There we go. There we go. Out of all of this, I appreciate it. I can always do that. Always do that. Out of all this week, out of all this time in here, these 2-3 weeks of buying, the only weakness we've had is right here. You've gotten about 15 minutes of hard actual selling due to MOCs. Nice big amount of volume being done on the closing print, and that's it. Really, everything else has either been a wash or buying, frankly. Even prior to this, we were very hardly trickling down. So the market is by far. We're not seeing a rush for the exits here. We're not seeing people panicking and flooding out of their positions. That could start if we start hitting levels and we start hitting stops and no one wants to be the bag holder. Sure, it's possible. And if we want to try to do some fib retracement, we hit the 23.6, I suppose. 50% retracement of this move recently would be around the 50-day, slightly below in the SPY. So we could get a retracement in here. But in my opinion, long-term momentum or intermediate-term momentum still up at the moment. We've still done this insane short squeeze, this insane rally up. The volume did start to drop off, which was kind of our first sign that we noticed last week that people were just done buying up here. And so we kind of saw the volume really start to lop off as we got to these highs. We did poke through this double top here and then kind of rolled back over. So we'll see if we get anything this week or if it just ends up being kind of a chop fest around this 200-day. That almost feels like the more likely scenario. Friday, we pretty much just shot a V for victory. It was really almost a W counting the last bit of action in here. So, had that nice morning selling, got into kind of, into the afternoon session, started buying. Power hour came, we started rolling over. Imbalances came out, we're going back up. So this is the market right here. This is what we have to deal with right now. So obviously, there's always a lot of people who come on during the podcast and so on, saying this is a difficult market for them right now. And I get it. I get it because there's a lot of sentiment out there that's bearish. But in the meantime, we're going up. But even within that, it's choppy and it's headline driven. And so we gotta keep that in perspective in terms of we gotta separate long-term biases versus bear market rallies and so on. So that's kind of just where we are. And if I go to the Qs here, same kind of deal, but we did fail off the 200-day. So that's why it's always good to look at kind of more levels here because we actually failed off some pretty decent resistance here, and it's definitely something to take note of. Now, if we were going to look for a retracement here, 50%, a little below the 50-day as well. So if you do think we can get a healthy pullback, even if we did pull back to say like around this 50-day or so, it's not necessarily meaning we're going down. I think we would have to watch the manner in which we did that and how fast we got down there. Now IWM is the IWM. It's the same IWM that we had last year. It's crap. It doesn't go anywhere. It's choppy. Its volatility, even when it does go down, can't even get out of bed. So the IWM has just no participation in either direction. It's just boring. And so, the IWM has given us hints. It's not to say you shouldn't look at it because there have been days where IWM's been weaker and has kind of been a leading indicator, if you will, where the rest of the markets are holding up, but IWM starts selling off. And so then the rest of the market seem to kind of go with it almost to an extent or vice versa. So there is definitely some help looking here as well, but small caps are still just kind of stuck in here. Now they are, trending up as well. They're stronger. So, it's right now we're still, in my opinion, in this bear market rally, we're still pushing higher at the moment. It's likely short-term in nature, but we've got some time. So this week, not this week, but next week rather, is going to be options expiration. So we still have 2 weeks until options expiration. We've got like 5 or 4.5 weeks until the next Fed meeting, maybe even 5.5. I'd have to pull up a calendar until the next Fed meeting. So there's a lot of just open air, if you will, a lot of just time that can pass before our next kind of actual market catalyst, unless we get an unexpected headline from Ukraine, Russia, or something like that. So that's what we're just going to wait for. And to not my surprise at all, Friday's employment number was a non-event. Really, it was just kind of boring. I don't know if that's really what set us on the path down. And we had that. We had PCE, the Fed's favorite inflation indicator, which would absolutely blew out, especially the core PCE deflator, blew out expectations. The highest number since 1982, when we had our peak recession, before they finally got a handle on inflation. So you've got serious inflation still out there, and the Fed, that's going to probably give the Fed more credence to continue hiking despite the yield curve inversion. So we're going to see, what the Fed does. Obviously, you've got people saying the next 4 meetings are all going to be 50 basis point rate hikes. The Fed can only do so much before they're going to need to start easing again anyway. So it's just it's a shit show there on that one. And I've got a video I'm actually going to be posting today. Mike's just watching it, make sure I didn't stumble anywhere or miss anything. You want to make sure that we covered on stagflation, because just to give a preview, we are on the path to stagflation. There are people who are out there just screaming, "Stagflation, we're screwed. It's derailing us." We're on the path. Yes, we're on the path. We have supply chain shocks and we have policy error. Those are the two general root causes of stagflation. Last time we had it in the 70s, it was due to the OPEC U.S. oil embargo, and then you also had policy errors from both Nixon's government and from the Arthur, I'm blanking on his last name, but the Fed governor at the time. So you had a lot of issues there, and so we're almost feeling something similar. But to be fair, at that time, oil had quadrupled due to the embargo. We're up like 25-30%. Now, obviously, maybe if we do like this latest run, because we were running prior to the war, we're up a little more. We're up 47%, you could argue, since maybe in the last year. And that's still significant, but we quadrupled. Inflation had gotten up to like 14%. We're at like 8%. We're there. We're doing well in the inflation front. It's still the highest since then, so I can't just say that this isn't significant. Unemployment was in double digits. Unemployment's not existent right now, but there's also other labor issues. It was a different market, it was a different world, but we still have a path ahead of us that maybe we can steer out of this. I don't know if it's the Fed necessarily that would steer us out of it, but it's more that right now, unless we fix what we're doing, unless the supply chain shocks can fix themselves, which with the war going on likely won't be the case, or unless we can fix some policy error out there, which is very unlikely to be the case, then we are on that path there. So that's partially why you see the bond market obviously a lot weaker. People are saying the bond market's pricing in recession while the stock market is not. And then the question is if we do dip into a recession, would that fix inflation? Because there are people out there, I think it was Peter Schiff maybe, who are saying that even if we did go into a recession, it may not fix inflation, because inflation right now is caused by issues that a recession wouldn't fix: supply chain bottlenecks, the oil issues, things like that. So that's just kind of going back to a macro view of things ahead of us, that you're seeing the bond market start to price in, and you're seeing rates start to price in terms of, okay, our probability of rate hikes is going up, but also our probability of rate cuts in the next year is also going up. So the market is pricing on the expectation that the Fed is going to be doing this wiggle dance between cutting and then easing, and that no one knows what they're going to be doing. The 10-year, meanwhile, if I'm talking about rates, if I kind of zoom out here, they are actually, I'm going to go to a monthly here. It'll be easier to see. They are kind of getting up to this resistance line pretty much for the last 20 years or so. It's done some nice touches. TYX a little cleaner. It was Mal, I believe, who brought this up to the attention. So really nice, just clean trend line down on this TYX. Have a little room above us to go. But we're starting to kind of hit that. So it's going to be interesting to see what rates do going forward. We are getting that pullback, and I wouldn't be surprised to see us continue to pull back, because this is what we did last time, kind of in the weeks preceding the last Fed meeting. The rates kind of dipped off. We kind of lulled a bit, and then going into the Fed meeting, we started ramping back up, and we ran through the Fed meeting and beyond. So I could see that happening again. We do still have some time ahead of us, like I said, several weeks until the next Fed meeting. So that's what I'd be expecting there. Definitely gonna have to watch the market. I have no idea where we're gonna go this week. because I don't know if we're going to get some weird headline or not. But right now, I don't see us moving lower unless I see velocity pick up on the downside. That's what I'm going to be looking for because what we're seeing so far, we saw velocity on the close here on Thursday, and that's definitely something to make note of. There was a lot of volume to sell on the close. We got pretty high. It was like 10 bill maybe at one point. We had a lot of closing orders. A lot of big money was selling. That's something to keep note of. And we had some big closing imbalances throughout the week. Not every day, I don't believe, but we had this happen before, and we made note of that. That could be a sign that smart money's selling. Maybe you're getting some profit taking. Who knows? But seeing that is definitely it puts some caution out there. It's something to watch. We need to be paying attention now. It's time to to monitor our market right now. We just had a little bit of a historic run, frankly, in terms of this bounce for a lot of stocks. So that was kind of all that, and we'll see where we are after the futures open and where we settle ourselves. But you've got your levels below us, 200-day, got inflection point. You got the 50-day then, which is also almost the 50% retracement. We've got our stacked levels that we talk about every single day at this point. Now, in terms of Russia Ukraine, the only headline that I really saw that was actually potentially kind of relevant, there's two really. First of all, is going to be Russia obviously trying to get their gas exports paid for in rubles. That could be significant going forward. Can't really tell if they're going to actually do it. Gazprom did actually start halting shipments through their pipeline, I think specifically to the UK, maybe a little broader. So maybe we start to see them actually put the squeeze on. But we're going to see who plays ball there and what happens with that going into next week. This is going to be the first full week of this. It's definitely something to watch if anyone blinks first. But Russia did another thing this week, and I don't know if they talked about it on Friday, but this is something that hasn't been talked about much. Russia really trying to push into that being going back to the gold standard. And it's very interesting because linking the ruble, having the ruble go in gold standard is going to be interesting because now it almost puts a floor in the ruble to an extent because you can exchange ruble for a certain amount of gold, which you could then probably it almost puts a backstop on oil and on especially if you have to pay for oil for rubles, which is also denominated and backstopped by gold. It kind of puts a floor on all this. So I'm not, I haven't done the due diligence in terms of looking at smarter people and what they think about this, but it's a very interesting thing that we're seeing happen internationally, and it's definitely an interesting move, and we're gonna have to see. I haven't looked at what the ramifications of that could be, but it's something. Ruble's obviously made a nice move here, and that's for a number of reasons. So we're just gonna have to see how that continues, but other than that, the war itself, no real developments that in the moment that I think are going to affect the market. So we'll have to see. Shanghai, meanwhile, continuing to lock down even further because their outbreak's getting worse, the worst now since the beginning of COVID. So supply chains probably going to get screwed up a little bit further. We're probably going to see a little bit of a mess there the longer that goes on. So it's just not going to stop at this point, and it's just kind of a mess there. That's the majority of the headlines. What we're getting this week is going to be pretty quiet. Except Wednesday we do have FOMC minutes, which could be interesting. Now these FOMC minutes on Wednesday are going to be for this latest meeting where we just did a rate hike, and maybe we get a little bit more information in terms of who dissented, what people wanted, maybe a little more in terms of we get a little bit of a further tint into all right, how many people wanted that 50 basis point rate hike, or what do people really want here, and how aggressive do we think the Fed's going to be in these next coming meetings. Maybe we don't get anything. It's possible, but could be worth. It's definitely going to be worth keeping an eye out on. But the first half of the week's going to be quiet. Factory orders, international trading goods, ISM services, whatever. So nothing that's going to move the market most likely, but give us a little bit more of a picture on the whole market. Commodities, meanwhile, oil and gas, doing its thing. I think everyone's watching it every single day at this point. It is going to be interesting to watch because we're coming down to the 50-day, which we haven't been below since this all started. Really since the beginning of the year. But with the whole Russia gas ruble situation and the U.S. releasing 1 million barrels per day if they can, we'll see what happens with oil. It's very headline beholden right now, and I'm sure we're going to get more headlines on this week. So it's hard to want to make a hard stance on this in an opinion. With that being expecting more headlines. Gold still in its chop here in its zone, kind of holding here. It's obviously still considered the safety trade. If stagflation does start to rear its ugly head, we'll definitely see gold pick back up. Definitely going to be one of the top players, but right now it's just kind of in a holding pattern. It went really hard, really fast, just like oil. So like anything, it's taking a moment to pause. Dollar's still in its range. Been in a range for about over a month now. Nothing's changed on this. Still waiting for this to make a decision one way or another. I don't know if we get that this week necessarily. And then last but not least, crypto's holding. It filled its gap and it bounced, which I'm okay with. I'm glad that it did that. We'll see where we open up by Monday. Or really by the future when the futures open today, but I'm very curious to see if we can get back up here towards the higher end of this range. Ethereum was stronger, which is usually a leading indicator. Ethereum is usually the leading one here and usually the stronger one. So Ethereum's already returned to the higher end of the range here on Friday. So this could be a little bit of a hint as to what we're going to see. I'm still bullish crypto at the moment. As long as we're seeing the market continue to be a little risk on. People think crypto will be a safety hedge. We haven't seen that yet. It's been more of a risk-on indicator, but that could change. But right now, it's picking up and it's holding pretty well. So we'll have to see what that would do. That may give us some opportunity this week as well. In terms of any kind of macro stocks and sectors and things like that, obviously, I think there's going to be like the three main boys to watch. Apple, obviously, being one of the strongest ones, just had a historic 11 straight green days, almost got up to new all-time highs. Was green for the year technically, briefly. It's pretty crazy. To see Apple. I mean, it is the institutional safe haven. We talk about that. Tesla hasn't even really dropped off. I mean, this thing's still flagging up here. It didn't even drop with the rest of the market. Not green for the year, but that's because it had this massive gap up prior on the first day of trading, which kind of cheats. Well, I guess it could technically, I guess, be considered green for the year if you look at where we closed at last year. But it's sitting up here nicely still. Got a gap below it. I'm sure it's going to break in one direction at some point this week. So this one could be in play if maybe you play the options on it or whatever. Definitely one to watch. They've had headlines flying around it, but it's just not. It's just absorbing them all. So it's going to be fascinating to watch Tesla. On this one. What's funny about Tesla is you pull up a stock and you pull up a stock like I don't know GME or maybe that's a bad example like Square or something. If you ever have RSI on your chart, you can always tell if a stock's historically been like in the last year or so weaker or stronger by looking at the RSI. Like you don't even see anything above 70. 70 is pretty much the ceiling here, and you got this nice big space below 30. But if I pull up Tesla, I can't even look below 30 because this RSI never gets cold. It never goes down that fast. It never goes down really at all. You get a little drop here, but that was just returning back to the norm. You've got this massive ceiling up here above the 70 line. But anyway, it's just interesting. It kind of gives you a little visual clue as to how strong this stock is over the last year or time frame that you're looking at. But anyway, Amazon, Tesla, Apple, and yeah, and Amazon. So I'm going to be curious to watch Amazon here because Amazon just lost its first union battle. That was up in New York. An Amazon warehouse actually unionized, and we've seen this try to happen in I think Alabama a couple of times, and so this could be something that could spread. It's something that we saw happen with Starbucks in here. They had one chain unionized, and then another, and then another, and it started growing. And so now we have a bunch of Starbucks chains unionizing. Amazon obviously is not a company that is very employee friendly, so unions will be interesting, and we'll have to see if that's a growing threat. I liked the quote I saw from one of the union organizers. They said, we want to thank Jeff Bezos because he went up to space, and so while he was up there playing around in his rocket ship, we were unionizing. So, the little shot across the bow. But we'll see. Those are the three stocks to watch, in my opinion, because Amazon went green for the year briefly. These are the big boys, and they were leading us for a while there. So we'll have to see if that continues. Obviously, the semiconductor sector was, pretty active and volatile. They've had a nice bounce. They've had a nice rollover, and you had a nice spill yesterday. Some pretty wild moves in here. Almost doing a little middle finger pattern in here. So this feels pretty weak. Intel had a nice pickup off the NVIDIA headline and then just immediately spilled off its 200-day. So you're seeing the semis roll over pretty nicely. Could be an interesting sector to watch. Verizon had a monster Friday out of nowhere off that 51. So there's definitely some interesting tech stocks that are holding up. Some consumer staple stocks. Consumer staples in general kind of broke out. This XLP is looking really strong. Had a really strong Friday. So I'm watching like Procter and Gamble trying to push through its 50-day. PepsiCo. I mean, these are stocks that I've looked at before to death. But they're looking really strong. Coke's about to break out for new all-time highs. So there are strong sectors out there. You're seeing rotation back into some of these consumer staple plays. Could be pretty interesting. Obviously, we saw utilities explode higher, and this is a sign that we should be maybe a little worried about the market as well. If utilities are typically that risk, that hedge, that bearish market sentiment indicator, so seeing utilities take off like this is also something to be leery about. And they had a monster Friday, so that's going to be very interesting to watch as well. With the high inflation environment, Walmart's still been kind of going strong here. It's been a bastard to try to day trade, but it's had some interesting swing trading if you can watch it. There are some good follow up plays from some of the stocks that had strong earnings. So like I'm gonna watch this PayX. It broke out after its earnings. It's sitting up here at 52-week highs. I might look to see if this starts taking off because there are strong stocks out here that aren't stopping. And it's the same ones I pull up. AbbVie hasn't stopped. Dollar Tree, Costco, hell, even kind of to an extent Berkshire, though it's kind of rolling over. So you find some of these strong stocks, you might get a nice little ride on some of these if they outperform the market. Lithium obviously had a nice strong week, sitting up here at highs. I mean, nice strong, frankly, month or half a month here. So we'll see if that continues. Definitely something I'm going to keep an eye on every day. And just an example of stocks that sometimes you hop on and they don't stop. This Calm is just another example. Look at this thing from the beginning of the year, from like 38 to 58. Ran into its earnings, had good earnings, and kept running. And it's just absurd. This thing's still going. If I zoom out here to like 10-year, this is a massive, massive. First of all, you have the nice 10-year trend line that we broke out of, and now you're at this 10-year resistance. This is a monster breakout. Now, maybe this is the rollover point, but regardless, you find a good, strong stock, and there are stocks out there that are good on the long term that are still giving you some returns. There are also obviously going to be the day traders, GME, AMC. AMC obviously weaker. GME's fighting around its 200-day. They did their whole stock split thing to pump themselves up. We'll see if they hold up. I don't see that happening. This LGVN is still holding up here. This is another smaller quote unquote price stock. That's kind of flagging around. Every day we're going to hopefully have a new kind of day trader to play around with as well. I'll obviously also watch the Russian commodity plays, Alcoa, Mosaic. I'm not going to beat this to death. We already know these stocks because it's all I feel like I'm trading, and I'm tired of them. But CrowdStrike, all these guys, so they'll be interesting as well. But that's really going to be it. We'll see what we get. It's going to be a Monday tomorrow, so I can't get that excited unless I see some action being done or some volume. Mondays tend to be kind of slow anyway and lighter on volume. We'll see if volume picks up. Last week's volume minus the close on Thursday wasn't that exciting. But definitely keep an eye on the market on close orders as well, because that could be maybe an indicator as to what smart money is doing and what big money is doing. But we'll have to see. But good luck for this week.